Hello, and welcome to Faw Casson's presentation on fraud prevention. I'm Kim Fonda, and I'm here today with Lori Harper. We're going to talk to you about different types of fraud, conditions that allow fraud to occur, and what to be on the lookout for. We will also provide you with some steps you can take to protect your company. At the end of the presentation, we'd appreciate your feedback by completing a short evaluation. In today's world, too many businesses focus on fraud prevention only after they've experienced the loss and heartache that comes with being taken advantage of. As I mentioned, we're going to provide you with additional information that will help you secure your business against the threat of fraud and provide you with additional layers of security. One of the most important things you can do as a business owner is to ensure there is a segregation of duties between certain areas of record keeping. That is, to have multiple people responsible for different steps of your bookkeeping and finance process. This is a simple yet important focus of fraud prevention. The more people that are involved, the less of a chance there is of one employee developing a method to steal from you without anyone else noticing. For those businesses with smaller staffs, separating some key functions will help protect your company. Laurie is going to start by talking about the factors that allow fraud to take hold.
To fully understand what your business is up against, it's important to look at the perfect storm that is usually present for people to commit fraud. The best way to illustrate this is by looking at the fraud triangle. The three factors that need to be present at the same time for an employee to commit fraud are at each point of the fraud triangle. First, the trusted individual must have the means to access the assets, records, and subledgers to commit the fraud. They could also be the person that is trusted with petty cash or other cash funds. There must be some trusted relationship with them that would allow them the access to the records or funds. They also need a motive. Motives can be wide-ranging. Sometimes the fraud is driven by a personal need, such as a financial situation where they feel backed into a corner. This often includes things like credit card debt, divorce, or other unexpected financial strain. Another main cause is that they are disgruntled. If they don't feel like they are being paid what they are worth or are not being compensated in other fashions, the employee may feel entitled to take the money or goods and not feel guilty, as they feel it was rightly due to them. Addiction is also a common culprit. Those that suffer from addiction are often so focused on procuring funds to feed the addiction, they may not stop and think about who they are hurting or how they are going about getting the funds. Be wary of signs of drug or alcohol abuse, gambling problems, or other addictive behavior. Opportunity is the last piece of the triangle, and usually the easiest place to help prevent fraud. There is an opportunity to commit fraud when there are a lack of controls in place or when management has not taken the time to convey the correct tone, establishing publicly that fraud will not be tolerated and creating a defined code of ethics. When the proper measures are taken, the ability to find an opportunity to commit fraud to begin with or to remain undetected for any length of time is greatly diminished.
We're next going to touch on some of the types of fraud. There are some very telling statistics that have been released in the Association of Certified Fraud Examiners report to the nation, which highlight some of the areas of fraud where fraud usually occurs. According to the association, the typical organization loses 5% of its annual revenue to fraud, with a median loss of $160,000. And the frauds committed by owners and executives are more than 9 times as costly as employee fraud. The first area I'm going to talk about is asset misappropriation. Asset misappropriation would include such areas as cash, inventory, and accounts receivable. This type of fraud can involve third parties or employees in an organization who fraudulently abuse their position to steal from the company. The ultimate result of asset misappropriation is that the business cash flow suffers. There's also a backlash on the organization's reputation and their staff morale. According to statistics from the National Fraud Authority in 2010, over 91% of fraud schemes are asset misappropriation related. which means it's the most common business fraud. Even though it's the most common, the statistics show that it's not the most expensive compared to other business frauds. The average asset misappropriation costs a company about $150,000. This may be the easiest type of business fraud to detect, though. Some simple ways to monitor your assets are checking adjustment accounts. For example, with inventory, check for shrinkage or unexplained overages. With AR, check customer credits or write-offs. And with equipment, look for fixed asset write-offs or review the repairs and maintenance account. One famous case regarding asset misappropriation is the Crazy Eddie case that started in 1971 in Brooklyn, New York. It was perpetrated by businessmen Eddie and Sam Antar. The Antars had adjusted inventory and regularly skimmed thousands of dollars of cash earned at the stores. The Antar family skimmed an estimated $3 to $4 million per year at the height of their fraud.
Corruption or bribery is another type of fraud. Corruption is far more costly than asset misappropriation. The average bribery corruption scheme is over $500,000. The most common bribery and corruption schemes include bribery, illegal gratuity, extortion, conflict of interest, kickback, and corporate espionage. A good example of bribery is in the case of Gerald Garson. Gerald Garson was a former New York Supreme Court Justice who was convicted in 2007 of accepting bribes to manipulate the outcome of divorce cases in his court. In the bribery scheme, a fixer told people divorcing in Brooklyn that for a price, he could steer their case to a sympathetic judge. The next type of fraud centers on the manipulation of financial statements in order to create financial opportunities for an individual or entity. This type of fraud is the least prevalent type in the business world. However, it is the most expensive and can cost a company an average of $2 million per transaction. Some examples of financial statement fraud include revenue overstatement, understating expenses, overstating assets, understating liabilities, improper use of reserves, mischaracterization of one-time expenses, misapplication of accounting rules, misrepresentation or omission of information. I think everyone is familiar with the Enron case. In this case, at the end of 2001, it was revealed that its reported financial condition was sustained substantially by institutionalized, systematic, and creatively planned accounting fraud. Enron has since become a popular symbol of willful corporate fraud and corruption. Given the numbers reported by the ACFE, fraud is much more common than people may think. Here are some statistics to think about. 87%. 87% of occupational fraudsters have never been charged or convicted of fraud-related offenses. Further, 84% have never been punished or terminated by an employer for fraud-related conduct. 81% of fraudsters displayed one or more of the red flags that are the most commonly observed behavioral warning signs. In 36% of those cases, the fraudulent party was living beyond their means. 27% of them were facing some kind of financial difficulty or stressor. 19% demonstrated an unusually close association with vendors or customers, and 18% of them exhibited excessive control issues. Billing and corruption schemes are the most common types of fraud reported. Each type represents over 20% of all the reported fraud. The remaining types of fraud, each representing around 10% of the total fraud reported, are expense reimbursement, skimming, non-cash frauds, check tampering, and payroll schemes. 30% of the total number of fraud cases were in small businesses. Statistically speaking, companies with less than 100 employees have been shown to be the most common victims of fraud. Generally speaking, smallest organizations suffer the largest median losses. These organizations typically employ fewer anti-fraud controls than their larger counterparts, which increases their vulnerability to fraud.
There are several things that you can do to prevent fraud. and one of the most powerful is a basic segregation of duties, eliminating the opportunity. This simply means assuring that no one person is completely responsible for every step in a financial or inventory tracking process. In each area of your organization, there are ways to ensure that there is a segregation of duties and other fraud retardants in place. Like with the process involving cash, the person who opens your bank statements and those that reconcile your bank accounts should be two different people. Check authorizations should limit who's allowed to use a signature stamp if you have one, and it's also a good idea to require a hand signature or multiple signatures on the higher dollar amount checks. Lastly, limit online access to bank accounts. In fact, just the employee's knowledge of management's use of online bank access would help deter the writing of fraudulent checks. When it comes to accounts receivable, it's a good idea to obtain and review edit reports to detect suspicious activity. Review for customers added in both collection or credit adjustments and write-offs. It's a good idea here to separate the people who are handling your accounts receivable postings from those who are in charge of doing the bank deposits. For inventory, the perpetual inventory systems are most beneficial since they are constantly updated after each transaction. Using this type of inventory in addition to random spot checks assures that the quantities listed as on hand are correct. Installing cameras in the shipping and receiving areas will reduce the temptation to remove inventory. Invoices should be reviewed to assure that the items agree on both the shipping and the receiving side. You can verify receipts of merchandise to purchase orders. For sales, check your shipping invoices against your customer invoices to make sure they agree. It's also a good idea to keep an eye on the write-downs of inventory for any patterns, with things such as the types of inventory, dates, or the personnel involved. For accounts payable transactions, vendor listings should be cross-checked for similar vendor and employee addresses. Also, large purchases from new or unapproved vendors should be paid special attention. You should also have a process in place to approve purchase orders and invoices. And it's also a good idea to have the PO or invoice provided to you when you're looking at checks to sign. Also, take the time to review purchases on the company credit cards and verify that there's no suspect activity.
In the realm of payroll, assure that employee reports are being checked to make sure the records and changes make sense. Compare the withholding reports and filings to expenses. For expense reports, assure that they are submitted timely, that the expenses are for employees only, and that they have provided receipts to substantiate the report. Review the journal entries posted in your financial statements looking for unusual account combinations. Calculate and monitor your profit percentages. Compare statements year to year and apply the current year's situation to assure your numbers make sense. Analytical reviews of expenses as percentage of sales and in relation to things such as payroll tax to salaries and wages and interest related to debt are also helpful as they can highlight a problem area. There are so many different ways you can help defend your business from occupational fraud. This is only the tip of the iceberg. If you're interested in seeing how to fully defend what you've worked so hard to build, Faw Casson can help you with reviewing your staff's current assignments and help you segregate key tasks effectively to provide stronger levels of security. We can assist you in drafting policies and procedures, properly defining job descriptions, how to handle discrepancies, and clarify how to report issues or concerns and provide your staff with clarity about expectations. We can also help you in implementing these new procedures effectively. We can aid you in setting the tone from the top and give you suggestions on how you can monitor the pulse of the staff. Giving them information on realistic performance goals and acknowledging the morale of the staff can go a long way. Good employees like to know what expectations they need to live up to. We can also review how to instill these expectations in new hires and how to assure that you are hiring people that are low risk for fraud to begin with.
So don't wait to become a victim of fraud. Take action today to prevent it. We have 3 certified fraud examiners on staff, and we're ready to help you review how to improve your business's fraud deterrent plan, or even to help you develop a whole new one. You can contact me, Kim Fonda, in our Dover office.
Or me, Laurie Harper, in our Ocean City office for a complimentary meeting to discuss what we can do for your business.
Are there any questions? Thank you very much for your time today. Have a good day.